Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 316 on March the 28th, 2024. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on TeraWulf Inc, Canoo Inc Ordinary Shares Class A, and the KraneShares CSI China Internet ETF. And we discussed three new trades on Canopy Growth Corporation, AdvisorShares Trust Pure US Cannabis ETF, and Hut 8 Corporation. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on today's show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, today's show will use the closing prices on March the 28th because the markets are closed for Good Friday on March the 29th. The Dow Jones Industrial Average picked up 331 points, closing at 39,807 points. The S&P 500 index grew 20 points, ending the week at 5,254 points. And now it's time for the topic of the week. The topic of the week is sizing your trades. There are lots of different strategies that people use to size their trades. Sometimes it's just a pure number, regardless of the size of your account. You might decide that all of your trades should be $500 or $1,000 or $100 or $200, whatever works for your account. Some people will decide to use a percentage of their account. In this scenario, you might decide that you're only willing to have 5 or 10% of your account at risk for a specific trade. That will keep you from taking a loss that ends your trading career by blowing up your account. Whatever your method, you have to decide how much money you are willing to lose on a trade. Always size your trades based on what you can lose. As an optimist, that seems like a really negative way to plan your trades. However, risk management is all about preventing the worst events from happening. When I worked for investment banks, they would stress test all of their positions based on a market move 5% and 10% higher and 5 and 10% lower. That way, they could see what a significant one-day move in the market would do for the firm's total positions. This test was never about how much money they could make, but it was about making sure the management team knew the maximum amount of money they could lose in a single day. Keep that in mind when you're sizing up your trades. Once you make a decision, stick with it. There's nothing worse than losing too much money because you broke your rules. Trust me, I know. And it's made me a much more disciplined trader to stick to my rules. Again, we've talked about this before. Plan the trade and actually trade the plan. So that's it for the topic of the week. Let's go ahead and get into the trading review of last week's trades. We're going to start off with the covered call on TeraWulf Inc, symbol W as in whiskey, U as in uniform, L as in Lima, F as in Foxtrot. At the time, the stock was trading for $2.38 per share. I looked at buying stock and selling that April $2.50 call at 35 cents, hoping for a return of 19.75% in 4 weeks. Well, shares of TeraWulf grew 25 cents, ending the week at $2.63 per share. The call option we sold grew 10 cents, leaving us with a net profit of 15 cents if we were to close the trade out immediately. Now, with stock above our strike price, we stand to make 3 times that amount of profit at expiration if the stock remains above our strike. We could also get assigned on the stock ahead of time, and that would also allow us to capture our maximum profit on this trade. So this trade is working out so far according to plan, actually, so no adjustments are needed at all. Next up, we have the credit spread on Canoo Inc, Ordinary Shares Class A, symbol G as in golf, O as in Oscar, E as in Echo, V as in Victor. At the time, the stock was trading for $4.34 per share. I looked at buying the April 4 3/2 put spread at 19 cents, which could give us a maximum possible loss of 31 cents per spread. Well, shares of Canoo fell 77 cents, ending the week at $3.57 per share. The out-of-the-money put spread that we sold is now at the money, and we are below our break-even point. Now, this trade is a loss so far, but we still have 3 weeks before expiration. My first thought is to sell the call spread against it to create an iron condor, but that wouldn't pay me enough to make it worthwhile. We could look to turn the credit spread into a debit spread by buying the 4.5 3 put spread, or there are a few other ways that we can manipulate this trade to make it more profitable immediately. Again, there's still 3 weeks left before expiration, so right now I'm actually leaning towards waiting a few days to see if this stock heads back higher. I like the way the market's been going overall, and there's a good chance that if we give it a few days, this stock might push higher, but then again, it might not. So you need to have a plan of attack ready for how to minimize the damage if this stock continues to move lower. And the good thing is, since we traded it as a spread, we already know what our maximum possible loss is. So as long as we entered the trade with that in mind, you'll be fine either way. And finally, we have the debit spread on the KraneShares CSI China Internet ETF, symbol K as in kilo, W as in whiskey, E as in echo, B as in Bravo. At the time, the stock was trading for $26.61 per share. I looked at buying the April 26 half call spread for 32 cents. That can give me a maximum gain of 18 cents, or that's a 56.25% return in 4 weeks. Well, shares of the China Internet ETF lost 36 cents, ending the week at $26.25 per share. That in-the-money call spread that we bought is now just at the money. The spread has lost some of its value, leaving us with a net loss on the week for this trade also. Now, if it were to go significantly against me, I would lean towards selling the April 26-27 call spread to turn this into a credit spread. However, I'm not convinced that this stock is not going to head higher again. So there's still 3 weeks left until expiration. I said this on the last trade too. So I have some time left to let this stock breathe a bit. Let's see what's coming in the next week or two before I decide to flip this credit spread or this debit spread into a credit spread and vice versa. Lots of options when you have time. That's what makes the trades that only have 2 weeks left much more risky. And if you guys remember, when I first started this show, I used to also offer trades that were only had 1 week left until expiration. But there's really no time. You have to be spot on, and when you're wrong, it really hurts. So I decided, a little bit of time is a good thing when you're dealing with options. So that's it for the trade review of last week's trades. Of course, Friday, March 29th is the day that the U.S. equity markets will close in observance of Good Friday. Regular trading will resume on Monday, April 1st. So all new trades on today's show will use the April 19th expiration, and we're about 3 weeks away from expiration. So let's go ahead and start off with our covered call. I'm looking at Canopy Growth Corporation, symbol C as in Charlie, G as in Golf, C as in Charlie. Stock ended the week at $8.63 per share. I'm looking at buying stock and selling the April 9 call at $1.37, hoping for a return of 20.16% in 3 weeks. Now, you enter this trade by buying stock for $8.63 per share and selling the April 9 call at $1.37. This trade makes the most money if stock prices finish above $9 per share. The break-even price is $7.26 per share, and in real terms, the stock purchase will require $863, and you will collect $137 for selling the option. Next up is a credit spread on the AdvisorShares Trust Pure U.S. Cannabis ETF, symbol M as in Mike, S as in Sierra, O as in Oscar, S as in Sierra. Stock ended the week at $9.99 per share. I'm looking at selling the April 9 put spread at 17 cents, which could give us a maximum possible loss of 33 cents per spread. Now, you enter this trade by selling the April 9 put at 81 cents and concurrently buying the April 9 put for 64 cents. This is a credit spread because we're selling the spread, and this trade makes the most money if stock prices expire above $9.50 per share. The break-even price is $9.33 per share, And in real terms, you'll receive $17 per spread that you sell and have $33 at risk. And our final trade on the week is a debit spread on HUT 8 Corporation. Symbol H is in hotel, U is in uniform, T is in tango. Stock ended the week at $11.04 per share. I'm looking at buying the April 10/2 11 call spread for 27 cents. That could give us a maximum gain of 23 cents or a whopping 85.19% return in just 3 weeks. Now you enter this trade by buying the April 10/2 call for $1.79 and concurrently selling the April 11 call at $1.52. This is a debit spread because we're buying the spread, and this trade makes the most money if stock prices expire above $11 per share. The break-even price is $10.77 per share, and in real terms, you'll pay $27 to enter the spread, and your maximum gain is $23 per spread. I love trades like that because sometimes that stock price is an indication, or the option price is an indication that this is going to head lower, but occasionally you actually get the pop. And, I'd love to make 85% return in 3 weeks. So that's the joy of option trading, right? So that's it for this week's show. Thank you guys so much. If you have any questions, definitely reach out to me. I am always happy to answer questions that make sense via email. I even hop on the phone occasionally and try to explain things with people. So just let me know if you need help. Thank you so much for listening. As always, have a wonderful weekend and happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.